So, a huge name on Wall Street just made a pretty big call on the Chinese EV maker NIO. They've upgraded their price target, and it's sending a signal of some fresh confidence. Today, we're going to break down that upgrade and figure out exactly what's fueling this new momentum. All right, let's get into it. In the EV world, it is an absolute dogfight out there. But one name is suddenly getting a ton of new attention from analysts. Yeah, after a pretty tough stretch, it really seems like the tide might be turning. And it all boils down to one key forecast. And here it is. This is the number that's got everyone talking. $6.50. That is the new price target Morgan Stanley has officially put on NIO stock. But, a number by itself doesn't mean much without context. So what's really going on here? Well, to put it into perspective, they've bumped it up from $5.90. That's about a 15% potential jump from where the stock was trading. And look, this isn't just some tiny little adjustment. This is a serious vote of confidence in where the company is headed. Okay, so that leads to the big question, right? Why? Why all the optimism all of a sudden? Well, the first piece of the puzzle, and honestly it's probably the biggest, is something that could be a total game changer for them. Their new sub-brand, ONVO. And here's the thinking, straight from the source. This is Morgan Stanley's analyst Tim Shao. He's pointing to solid order intake for a new ONVO model. What he's basically saying is, hey, even if this year has been a little slow, the orders they're seeing for this new brand are so strong that they're expecting a major recovery in a couple of years. So this is the whole strategy here. ONVO isn't just another car. Nope. It's NIO's direct shot at the mainstream family market. They're aiming right at the heart of the territory that's been dominated by huge bestsellers like Tesla's Model Y. But they're coming in with really competitive pricing and features built for families. And look, this isn't just hype or some far-off projection. We're already seeing tangible proof that the market is buying in. Sales for ONVO jumped from just under 15,000 units in the first quarter to over 17,000 in the second. That is exactly the kind of early growth that gets analysts excited. And that brings us to this magic number right here, 20,000. That's the monthly delivery goal NIO says ONVO needs to hit to actually become profitable. It just underscores how absolutely critical the success of this new brand is to the company's bottom line. But a promising future is only half the picture, right? The other part of this whole equation is how NIO is doing right now. And that's where Morgan Stanley is also seeing some really positive signs in the company's financials. Just take a look at their vehicle margin. I mean, that's basically the profit NIO makes on every single car it sells. In an industry that's famous for these brutal price wars, they somehow managed to increase that margin from 9.2% up to 10.2%. That's a huge sign that their restructuring efforts are actually working. And it's not just the margins. Look at these other numbers. Revenue's up 22% year over year, gross profit shot up a whopping 89%, and the stock itself is up 17% since the year started. These are the hard numbers that are backing up this whole optimistic narrative. Okay, so that's the bull case for Morgan Stanley. They're clearly optimistic. But are they an outlier? Is all of Wall Street on board? Let's kind of zoom out a bit and look at the bigger picture, because this is where things get a little more complicated. Wow, yeah, this chart really tells the story. Wall Street is pretty much split right down the middle on NIO. Out of 26 analysts, you've got 12 saying buy and 13 saying hold, with just one sell. So it's not like they're bearish, but they're not all in either. It's more of a wait-and-see kind of vibe. And right here, you can really see how bullish Morgan Stanley's call is. I mean, their target of 650 is way above the average target of 492. This tells you they're seeing something in the ONVO brand and the company's financials that makes them way more optimistic than most of their peers. So, with Wall Street kind of on the fence, what's NIO's plan to win over the rest of the market and actually hit those big targets? Let's take a look at the road ahead for them. Their game plan really boils down to 3 key moves. First, they're going all in on scaling up the ONVO brand to grab that mainstream market. Second, they're going to keep using their unique battery swapping tech as a major selling point. And third, they're pushing hard for more growth overseas. So what should you be watching? Well, on the plus side, they have this massive network of over 1,300 battery swap stations in China. That's a huge advantage, and they're expanding into new markets like the UAE. But there are definitely risks, especially the potential for bigger tariffs from Europe on Chinese EVs, which could really throw a wrench in their global plans. Which brings us to the final and most critical question. All the pieces seem to be in place. A new brand for the masses, better financials, and a unique tech advantage. But is it going to be enough? With this new strategy, has NIO finally cracked the code to really, truly challenge a giant like Tesla? That is the multi-billion-dollar question that Morgan Stanley is clearly betting on.